All righty, welcome everyone. Welcome to the Hurley Investments Market View commentary for Monday, the 9th of September. All right, I've got a couple things I want to work with you guys to understand because I hear a couple things and I'm seeing a couple things. I'm getting more and more inquiries on what we're doing. More people are watching the webinars. So let me just start off with a little story. My daughter's first high school volleyball game just ended 2 minutes ago. And this is the roller coaster of how you felt. Won the first game easily. And I was thinking, we are great. Easy win, and she will get more playing time. We then lost the next two. I was feeling heartbroken, thinking how sad she must be. And she did not play. I think she only went in once in each game to do a serve. We miraculously, good thing I can spell so well, miraculously won the fourth game. And it was 15-13 for the last game for the win. In the last hour and a half, my emotions were all over the place. And I'm going to equal that to our emotions with the stock market. Now, understand, one of the most unusual things today, or I should just say, today's news comes at us minute by minute. And I think I first understood this, I want to say in 2008, and the stock market crashed, but I probably first understood it with the terrorist attack on the Twin Towers. Minute by minute, I was glued to what was happening. Minute by minute, I wanted to do something. Minute by minute, I was wondering if I could get called up or if I could serve. That was the first time that it hit me on how important the news came to us minute by minute and how emotional we are as people. And that's one of the biggest problems of the stock market. You should never be trading on emotion. Yes, last week was one of the worst weeks since March of 2020. S&P, I would say, S&P down roughly 4.33%, roughly. And then some of our stocks, NVIDIA, Alphabet, Amazon, they fell 4% or more along on Friday. So here's what I'm trying to help you understand. Our stock market goes through these peaks and valleys. And for the most part, it's gone like that, except for, boy, the 12.5-year gap from 2000 to 2012.5, right? In essence, it runs primarily like that. We want, and as simple as I can say, we want these downturns. These downturns are amazing for us in our process. Will someone please tell me why we want these downturns in our stocks or in our markets? Someone please tell me, why do we want those downturns? Why are we looking for those big drops? And if you don't know, just type a question mark in. Cash out on protective puts. It's like breathing. It's the opportunity to pick up more shares. It's the opportunity to make money on the way down. You need them to do the collar trade. Gives ammunition to go back up. Yes, all of those are amazing. Gives you the opportunity to pick up more shares without taking more money from me. Thank you. Yes, those are all amazing opportunities for the stock market to go on sale. Now, I'm just going to make this comment, and I want some real answers here. How do you feel when the stocks or stock market goes on sale? And I've got my answer too, but I want you guys to answer me. How do you feel when the stock market or your stocks go on sale? One of the hard things about doing the Warren Buffett strategy on stock picking is he's got millions, billions of dollars to wait for things to come back. We don't. How do you guys feel when the stock market goes on sale? And I've got my three emotions, they're right in a row. But what are your guys' thoughts or feelings when your stocks or your stock market goes on sale? On sale is good, but maybe it's the beginning of a crash. So we have one that says future worries. I'll buy that. I freak out. Mary? Yep, I get it. Out of all the people to say that, I would have bet it would be you. I'm not patient. I understand that one. If puts are in place, no problems. This too shall pass. So it's interesting because we see this, and I'll tell you right out of the gate, my emotions work just like this. I usually get pissed off. I get pissed off right out of the gates because the numbers dictate where we should go, where we should be. And it's like, you stupid market. So I get pissed off immediately. And that pissed offness can run for a day. It can run for 3 months till the next earnings. Hell, it can run a year sometimes. And then, like everyone else, I then go to worry. My money's in just like everyone else. With Jared's accident, huge setback. I pulled out some money at the worst time to pay for doctor's appointments and therapy and medication. My son's accident kicked my portfolio's butt. And then the last emotion is the opportunity. And I know this. I've been doing this for 30 years. But the opportunity is always at the end. No one wants to be around me when I'm pissed off. My wife brings on the worry, as do my kids and bills. And then I get this opportunity, and my wife's like, well, you're just the eternal optimistic person. And I'm like, wait a second. 2 weeks ago, I was pissed off for 13 days. One day I'm worried. And now today, because I see the opportunity, you think I'm this eternal opportunistic person? You hated me for 13 days because I was pissed off. I joined you in worry on the 14th day. And on the 15th day, I finally see the opportunity, yet somehow my wife thinks I felt that the whole 2 weeks. And I look at her and I say, well, that's not the truth. That is the problem, honey, on why you're not investing our money. It's emotional. It's emotional where you missed 2 weeks of experience and frustration and anger and me not being the nicest or best husband, being a loser husband, right? We'll throw it out there. One day of worry where, it's this, and I start crunching numbers, and yeah, I go through worries. I see bottoms and black swans and run the calculations. And then it's like 15 minutes waking up, and that whole 2 weeks is out the door. If you felt that way, that's why Hurley Investments is here. My wife is a horrible investor. My brother's a horrible investor. They can't remember the history. Last week, I showed us NVIDIA. On this particular day, we had a $6,800 loss. We made up what, $6,123 when it's all said and done and finished. It's a great day. This is the opportunity. We're raising cash right now. We cash this out. We're turning $5,300 into $11,000. We're turning $1,768.95 into a $1,200 profit. We are building cash in accounts through long put protection. Has it been ugly? Yes. That's the downside. The downside is looking at NVIDIA. And for crying out loud, to make it 100% legit, at one point in time, we were right at the 135. Intraday started up almost 140. Down, back up. Oops. Let me put that back to where we were at. Back up. And then we fell down to 89. You know what's amazing? We had $36 puts on. And we took them off. And then we made a great amount on the way down. We're back up. We had 126 puts on. Took them off. We've added shares. We're building money in your portfolio for more shares of NVIDIA. I'm going to go back to one more of our stock positions. Dang it, that doesn't do what I want it to do. Let's go to Micron. Kevin, Micron has lost half of its value. Not quite. But boy, we did amazing. We had protection on at the earnings. We got it off right here. We had new protection on. It fell all the way down here. No, we did not catch it here at the bottom, but we took some off and added shares. We've got more protection on for our run down on Micron. We are building huge amounts of cash that will become more shares of stock. How often can you get into a stock at $86.27 that's traded as high as $155? How often do you have proof of a stock that can almost double in value in trade at the $155 range? Here is your proof. They had amazing earnings. NVIDIA had amazing earnings. Baidu had okay earnings. Under Armour had so-so earnings and they went up over 20%. Disney had amazing earnings. Apple had amazing earnings. Google had amazing earnings. Bank of America had amazing earnings. We have proof in the stock price that our stock right now can go from $86 to $155. It's right there. There's no fundamental change that justifies this drop. Google. Kevin, oh my gosh. Yes, we had protection up. Yes, we had protection up here. Yes, we had protection down through here. And not only that, but when it broke the 56, we added double the protection on. We were losing money this morning on Google. And Keith's like, do we take half off? No. The gap over here in March coincides down here, 144, 142. We have double the protection on Google because it broke the 200-day simple moving average. When it breaks the 200-day, there is a very good chance it's going to drop 10% or more. 10% from 156.44 is $141-ish. We were smart and doubled up on protection on Google. I'm telling you all this because we even have mainstream media. Okay, worst week since March of 2020. Big tech stocks were down on Friday alone 4% or more. If the movement of the markets is the barometer for the health of the economy, then we're in for some bad times ahead. That's, however, a very big if. Markets are less an Excel formula than words, often random autocomplete suggestions. What do we know from the hard numbers? That the U.S. economy, while not doing too great, isn't nearly as bad as stocks imply. I absolutely loved, if I can just get it to go, the briefing big picture. The briefing big picture explained what a recession is. What is a recession? And I'm starting right here. You guys will be able to see this on my Hurley Investment.com. The textbook definition says an economy is a recession if GDP contracts for 2 consecutive quarters. That doesn't mean there can't be recessions in individual sectors of the economy when you don't have economic activity contracting for 2 consecutive quarters. Yet that doesn't count as far as the National Bureau of Economic Research Business Cycle Dating Committee is concerned. And then they go through things that you need to worry about. But here is 2 things that are important. The real personal income, less transfers, isn't screaming recession. And the other one, we had an inverted yield curve that 100% of the time says we're going to have a recession in 6 months to 2 years, or maybe longer. Well, we've had a pretty good stock market last year, pretty good stock market this year. It's very interesting because I don't know if we've become a group of people that has to have our media give us the worst case scenario for us to pay attention to it. It doesn't mean that if one point of the economy absolutely sucks, that we don't have others that are doing just fine. It doesn't mean an indicator that's worked every time for 70 years won't one time have a change. I've said it a million times before, and I'll say it again. Past performance doesn't indicate or guarantee future results. Kevin, you were doing so good until we had 2022, half of 2023. Yeah, my results were phenomenal. And I went to a brokerage house that screwed us. Yes, there are billions of dollars in lawsuits against the brokerage house. Yes, we are part of those lawsuits and Securities and Exchange Commissions working on our behalf. I'll be 100% honest with you. Probably nothing's going to come of it. I should have went over to Money Block immediately. I should have went to someone who's willing to work with me instead of having me just be $1. I should have went to a place that had the same values I had versus just wanted, 40 million put over under their management, under their brokerage house. I should have known better. I should have gotten out quicker. There's a bunch of shoulda, woulda, couldas. But past performance doesn't indicate future results. I'm sure you can always find some point in time when something horrific will match up with the stock market. We're excited for things to go on sale. Everyone thinks the stock market will most likely come back at the end of the year. I'm one of those. I thought there was no way we were going to get a rate hike, a rate cut. A rate cut really worries me on how our government will fund itself. But it looks like it's coming. Maybe 50 basis points. I can't see that right now. We're expecting maybe 100 basis points, 4 quarter-point rate cuts between now and the end of the year. That seems like overkill, but if Powell can learn how to be a Greenspan, right? A Bernanke, hey, we're on a path of rate cutting over the next year. That's all he has to say, and our stock market could be unleashed. Next Wednesday will be a day to be stuck in front of the computer all day long. Even though we had an update today, where our markets end this week, I'm going to tell you lower. That is the sentiment right now. Technically speaking, our Dow Jones Industrial Average, even though it's up today, in 1 week, it is technically bearish again. And it's funny because one of you here said, hey, what are you talking about? Crossover is bullish. If you had a 50 and a 30, a 20 and a 9 and a 20, a 15, 30, a 20 and a 45, there's technically bearish. You're still technically bearish here. Your technical indicator says the market is bearish after being bullish the week before. S&P 500 broke the 50-day. Bearish, bearish, bearish. We have our 3 technical indicators all in alignment saying that our stock market is bearish. Our only next catalyst higher would be the rate cut, which means realistically, we're probably going to float down to 52.94. NASDAQ, bearish. Heading down farther. I made the comment, a couple people didn't believe me. We're almost there. We'll probably float down to 16,289. These are our reference points to start to picking up more shares. These are our past history, doesn't guarantee future performance, but this gives us an idea where we can add more shares ridiculously cheaper. Going back to crying out loud. Going back to our charts, Our last time we had shares was down around here. We're going to get to add shares down around here on Micron. We're doing really good. For some of you that got in at 86, man, what a nice ride to run all the way and to make some great profit on the way down. This is how stock markets and stocks work. For those of you that were in Meta, you've already been through this process. You've already been through the process of seeing something lose 2/3 of its value, go back up. It was a 2-year, 3-month process, and you made like a 425% return. We're in that process for a lot of positions. I found it very interesting, huge. When it starts to suck and hit the fan, where is it? When it really starts to suck and hit the fan, people are looking for other things, and RIAs, registered investment advisor firms like my own, start making crap up. 9 big firms started blowing a crap load of hot air up your skirts. 9 investors are violating the marketing rule by disseminating advertisements containing untrue or unsubstantiated statements of material fact, as well as testimonials, endorsements, or third-party ratings that lacked required disclosures. Abacus, huge one. Appease Capital Management, Beta Wealth Group, there's another big one. Drom Strauss Advisors, Howard Bailey Securities, a huge one. Integrated Advisors Networks LLC, there's your auto trading, a $325,000 fine. Professional Financial Strategies, there's your estate planners, full of crap. Richard Bernstein Advisors, another one, full of garbage. TS Bank, DBA Callahan Financial Planning, huge one, another fine. Guys, I had someone that asked me to do some research, well, someone that was looking into gold. And the first thing I did is I went to BrokerCheck. It's brokercheck.finra.org. FINRA is the site that regulates and punishes us for doing those things that we do wrong, turns it over to the SEC, and then it all you know what breaks loose. But brokercheck.finra.org. You can do it for an individual. You can do it for a firm. You can find out if people are full of garbage or not. You can type their names in here. You can type in who they are. You can type in a state. You can look up us. You can find more details. You can go to the SEC site to see if we're full of garbage or not. You can see the licenses. 15 years of experience, which is kind of funny because if you go through, you see it's Hurley, you see it's a little bit more than 15 years. But you can see the track record. 0 disclosures. Every 4 years, you go through an audit. I'm going to piss off someone sometime. No complaints through this time period. All I'm going to say is you've got to do your research. You've got to do your research even to the point where you've got to do your own calculations for what you see online. Kevin, what are you talking about? Well, it's interesting because a month ended in July. Actually, it's the fourth one, excuse me. The month ended in July at 55.22. And then the first day that the market opened in August, it opened up at 55.37, yet closed at 5,446. It was a big down day from where the market closed on July to where it closed on August. Down roughly, what, 60, 70, 80 points, 80, 84 points. Yet when most people do their calculations, they run off of the closing, not even the opening, but the closing number of August to the closing number on the last day of August. Which was 5,648. August was up huge. 5,648 and 40. I'm looking at this number right here where it closed. $5,648. $5,522. I don't get the numbers when they're using the closing price there. Yet nobody uses where it opened. Well, that's not where it opened right here, right? We literally are forgetting. Nope, it opened right there. That was the high. Open, high, low, close. So it's just shocking how between days, the gains or losses, usually the losses just evaporate. They're just gone. They're just, oh, it never happened. All right. Going through this week. Not much is happening. Earnings, pretty dismal. Adobe on Thursday could be important. I'm pretty sure we don't have Oracle. CPI numbers, PPI numbers, pretty dismal. It's going to be a quiet week. It's going to be a week of worry. It's going to be a week where Apple brings out their new phone, and historically Apple loses money after they report their new phone. The iPhone 16 looks pretty neat, might be pretty neat. Apple usually loses somewhere between 3.5% to 7% after they announce the iPhone in the next 30 days. All right. I have an article on CNBC, Why Markets Aren't Always a Good Barometer for the Economy. Please read through it. DirecTV files FCC complaint against Disney for anti-competitive practices. Please read through it. That seems like a no-brainer that Disney's no problem there. The semiconductor ETF just has worst week since 2020. That kind of goes hand in hand, but obviously read about the semiconductors. A lot of us are in some of them. And the Asian Pacific markets fall mostly on Japan spending misses, plus there's the typhoon in Hong Kong. So please, I guess what I'm trying to say is when you go through that emotional cycle, whatever your cycle is, go back to the numbers. Go back to something that's proof. Because somebody says something doesn't mean jack squat. Go back and let someone prove it to you. With that said, we are most likely going to go back over our numbers for stocks that we went through at the beginning of the year, so you can still see those opportunities going into the end of the year. With that said, any questions? Are there any questions you guys have? Or a better way, what can I do to help you that when the stock market goes on sale, you don't run out of the building? Go ahead and get pissed off. Have a day of worry that makes you work a 14-hour day crunching the numbers. What can I do to help you to get over the anger or worry stage to help you get into the opportunity stage? Or if there's not, just tell me to have a good night. And we'll call it a good night. Thanks, Abraham. Abraham's been around me for what, 20 years now, 24 years now, Abraham? Abraham, you've been around me for 24 years. Give these individuals something to go on. Now that you've been around me 15, all right. Help us out, Abraham. If there's something you could help us close on tonight, help us out. All right. Well, I'm going to use Williams, and Williams, we'll go on that one. Remember, business cycles happen all the time. William, I'll give that one to you. All right, guys. Hey, have a great evening. Pleasure being with you here. Don't forget, you're always welcome to give me a call. You can call me at any time you need to. I appreciate you guys being here. I hope this helps you. Next Monday, our plan is to go over those numbers again to give you some inspiration on what you have to look forward to towards the end of the year. Have a good evening, everyone. I'll look forward to talking to you next Monday. Good night.